Welcome everybody to another episode of Learn Biz. Here with your host Ryan Murray. I'm Ethan Miliori. Today I want to talk a little bit about the difference between personal finance and business finance, because we find a lot of small business owners that try to mesh them, and there's some things that can, but anyways, I want to spend some time talking about that and the differences and why we do personal and business slightly different, because there are some advantages in the different practices between the two.
So I came up with what I think is a beautiful comparison.
Okay.
Maybe it's horrible, but I think it's great.
I'll let you know either way.
You will, yeah. So you've been remodeling your house.
Yeah.
And a pretty major remodel.
Yeah.
I think you've kind of gone through the whole thing,
Yeah.
and I mean you're still working on this. This is a multi-year kind of remodel.
Oh, yeah, I still have another year or two.
Yeah. Okay. Here's the question: are you a professional or are you a DIYer?
Oh, I'm a DIYer. In some areas, I'm more professional, but I'm a DIYer.
You're a DIYer. What's the difference between a professional and a DIYer for home remodeling?
Oh, this is an interesting question. A lot of times a business license, but there is some like electrical. There's some state certifications.
Okay.
Plumbing. There is a certification, a journeyman of plumber. But there's handyman that they can tinker with pretty much anything, but electrical and some plumbing, they're kind of no, stay away from that. But they do everything else. A lot of times it's a business license and experience.
Okay.
Years of experience makes that.
Can
make them.
I know people that have 30 years under their belt and they are not allowed to do any work on my house.
Like for an example, that's an interesting point. And eventually I'm sure we'll wrap this back into personal finance and business finance. But because we've had a few people do a few things for us out of time, or it's maybe a little bit too technical and I don't want to take it on. But afterwards, I've had my wife make comments to me, you would have done a better job than they would have done.
Mm-hmm.
And I didn't come out and say, yeah, I know I would have, but part of me was like, yeah, because some of the ending result that they did was not that great.
Mm-hmm. And so this is what I want to look at. You're talking about personal finance and business finance, and I'm saying, okay, I want to think in terms of DIY finance and professional finance.
Okay. All right.
And in my mind, because I hit on this one a lot. I do a lot of trainings, a lot of seminars, and when I do consulting with businesses. And the thing is everyone starts to think that just because I've got an accountant, that therefore we're doing it professionally.
Right.
I see a lot of accountants that act like DIY financiers.
I would agree.
And so that's...
I've seen bookkeepers who are better accountants per se than a formal accountant.
Right.
Yeah.
Just like your wife is saying, hey, you could have done a better job than that.
Yeah.
And so I want to look at it and I want to say, okay, when is it time to hire the professional? When is it appropriate to DIY it? And what are you looking for? So, for example, if I'm going to hire a professional to do a remodel on my house and I'm completely hands off, is that a smart strategy?
Can be.
It can go either way. It kind of depends the professionals that you're hiring.
If you have because I do know people that have no, I'm going to say just basic carpentry skills, meaning reading simple, you think it's weird when I say reading a tape measure. And some people might say, in rural America, most of the time you say reading a tape measure and they're like, big whoop-de-doo, that's easy. But I'm telling you, I know people that probably aren't real good at that. They'd be like, it's like 4 inches and 1, 2, 3, 4, 5 marks more, right?
Yeah.
That's how they would do it.
Yeah. I'm like, is that the big marks or the little marks?
But you bring up, man, my brain is just turning like crazy right now, because another one that I would put out there, and don't lose your thoughts, because I'm taking over.
You run with it, man. I knew the second I said DIY Homer model, like I might not ever get you back.
Well, another reason or thing that I think separates maybe DIYers and professionals is the quality of the tools that they use.
Oh, right? Okay. I love that. I love
Paper
where that's
versus
going.
QuickBooks.
Yep.
Yeah. You know what I mean? And so there's a lot of things I put myself in the DIY because when I know I just have to do a little bit, I'm not going to invest a whole lot in all these tools, even though if I would have had the other tools, I could have done a better job. But the opportunity cost, you understand, that wasn't in it for me. So I wonder, so from a financial position, you know what, having the right tools helps you raise your level of expertise because you're able to track things cleanly, more appropriately, accurately, regularly. It makes it easier and it simplifies it than, because I still know people who do their books on paper, which blows my mind because there's amazing software out there now.
However, this is super interesting. I've researched this and I found that small businesses that do their books on paper have fewer errors than people that use accounting software. Now, this doesn't mean, this is really interesting because I'm going to do this whole Homer model comparison.
It's probably not the norm, but I see where you're going with it.
No, it actually is the norm, and I'll clarify why it's the norm. Okay,
yeah, this is interesting.
If we go back to the home remodel, if you're going to start with someone, are you going to give them a pneumatic nailer or are you going to give them a hammer?
Well, a hammer. But I would hope they'd have their own pneumatic nailer.
Okay, are you going to give them a paint sprayer or are you going to give them a paint roller? Like, where are you going to start somebody, right?
Paint roller.
Because how much damage can I do with a paint sprayer? If that's done wrong...
Oh, yes.
Like you'll suck up a gallon of paint in no time.
And have done half a wall.
And
you didn't understand.
And that half of the wall has to be redone because it's going to have all sorts of waves in it. But if someone's doing a roller and they're doing it wrong, how easy is it to fix it? You can come in and be like, hey, you need to not leave these streaks here and just go over it again. It's really easy to fix, right?
Yeah.
And I could do this with any set of tools. The problem is once you start getting into, like, okay, let's talk about compound miter saws.
Right.
I've seen a lot of people chew up a lot. Like if you've ever done crown molding, and you don't know what you're doing, and you put it in a compound miter saw, and you're like, well, it goes right there. Zing, and then you realize, wait, short. I just cut my angle the wrong way. I'm just short. And you're throwing away 8 feet, sometimes 12 feet of molding because you're off by 1/8 of an inch or because you went the wrong angle because you didn't realize that it was flipped upside down.
Putty and caulk and
And so, but if you give someone a saw... like they're going to think through because they're just like, I hate sawing all these things. So they're going to be a lot more aware because the compound miter saw is so easy to cut. It's so easy. I see people on a compound miter saw, like they'll make 3 cuts just because it's fun. It's like zing, zing, zing. And so my point is to say that having the old school tools forces you to slow down a little bit, makes it easier to catch the mistakes. And it's the same thing with finance, right? Yeah. If I'm using pencil and paper, if I'm using an Excel spreadsheet, it's a whole lot easier to catch the mistakes because I can ask someone, what did you do here? And they're like, oh, I added these 2 numbers together. I'm like, well, you can't add those numbers together. But when I start to break down someone who's been using an app, and I don't know if QuickBooks is still the top dog. I think it is. I haven't used QuickBooks for a few years. I like other apps personally. Yeah. I think Wave apps. I'll put a plug out there for them. Well, maybe I should be careful on the plug because they were acquired by H&R Block, and I preferred before they were acquired. Yeah. But they had some great free tools if you're just starting out.
Well, and there are for tracking all kinds of expenses and
so. Yeah. But anyway, so. I'll sit down with someone and I'll be like, okay, where'd you go wrong? And they don't know on the software. They don't know.
Yeah,
And
it's harder to track something through software than just on an Excel spreadsheet.
And so that doesn't make software bad. And that's the thing when I say, okay, there are fewer mistakes, people take it as, you're advising to use paper and pencil. And I'm like, no, I'm advising to start with paper and pencil.
Do you think that is because they haven't taken even a basic accounting course to understand a general ledger? You know what I mean?
So going back to the DIYer, great question here. How many people are DIYers on their house? I'm not talking finance here for a second, on their house out of necessity. And depending on what part of the country you live in, I mean, there are parts that are heavily regulated, so you don't get to be a DIYer.
Right.
And there are parts that, like,
you can do whatever you want.
Yeah, the regulator hasn't driven by that down in the last 3 months, so... Yeah. But there's a lot of people that they're just like, oh, I know how to do that. I shouldn't use any
voice.
any voice. Oh, I know how to do that.
Well, if you sound like that, we're making fun of you.
I'm trying not to stereotype here.
That's what makes it funnier.
So anyway, and they just start doing stuff. And when you're buying houses, especially in today's market where all the houses are just so ridiculously expensive, you start looking at houses and you see them and you're like, who put this together?
Oh, yeah.
And it's the same thing with finance. Is it, because you asked the question, is it because they haven't taken a basic financial course? I'm like, yeah, it's not just they haven't taken a basic financial course. They don't know what they're even trying to accomplish.
Yeah.
Like, if you don't have an end goal, and I've seen that with house remodels where they start remodeling and I'm like, did you plan this out or are you just putting additions on? Because this thing sort of just keeps going. Where does this door go? Oh, nowhere.
Oh, yeah. Well, and that's not uncommon, but that's a fantastic point that because, as Heidi and I have looked at this remodel, we've tried to be very, very intentional about what we do. We're not trying to, well, let's do this little thing and then we'll figure that one out. No, we tried to be as intentional as we can because one, we want it to be good for the next 20 years and we don't have to redo anything, right?
Yeah.
And that's the same attitude that when it comes to business finance ought to be your attitude, right? Is we're very intentional about what we do with finances because it's that important, because if we don't get it right, it's expensive. And if we do get it right, it really sets the stage for growth into the future.
And this is where, so your original question was, what's the difference between personal finance and business finance? And I want to bring this back to this is a key difference. Personal finance has kind of groomed us to be more reactionary. I look at whatever my salary is. I go work for someone, I make a salary, and then I budget that salary.
Right.
Business finance can't go in that direction. It needs to go the intentional direction.
Yeah.
You need to say, where am I taking my company? What do I need to invest to get there? What's the financial plan that I need to put in place? And so whether you're going to DIY it or whether you're going to hire a professional, I don't actually care. In fact, that's something I typically would say DIY it because it's your vision, it's your goal.
Well, and I would agree with you on the DIY because I like working with business owners who know their finances.
Yes.
If they don't, meaning their accounting, what's going on, their sales, they know the day-to-day stuff fairly well, even though they may not have a good grasp on ratios, relationship between balance, and profit loss. But we can work with that, right? If they know the inner workings of the cash flow of their company.
Correct. Well, and this is something that I always look at. If the only financial goal your company ever does is a sales goal, you're missing 70% of your company.
Yeah.
Like, put some profit goals out there. Put some cash goals out there.
Production goals.
Just like inventory turns. Put those goals. So when I look and say, okay, what are your goals? And it's like, here are sales goals. Like, you don't get it, do you? You don't understand that there's so much more that goes into your business. But sales is easy. It's like sales are up or down.
But see, like this is what's interesting as well. But like with personal finance, if I say, all right, here's my budget, and I want to save 10% of my budget to go towards retirement.
Okay.
Right? Okay.
Sure.
That's an easy number. Okay?
Yeah.
And if I do that 10%, it's interesting that the rest of the cash and money that comes in, I don't care what happens, right? Mm-hmm. Because I hit the one sales goal, right? Which is bad, because the reality of it is, at the end of the month, let's say I still had $500 sitting in my checking account. Mentally, I go, well, good, I can go waste it, right? Instead of, wait a minute, maybe I should put that into my retirement.
Yeah.
Right? And so we find that same mentality, though, rippling into the way you run your business. You know, hey, we had a great month. There's extra cash. Maybe it's the time that we need to splurge on something, even though we don't really need the new truck. We got the extra cash. Let's do it now. And so I waste it, only to find out in 3 months I have some really bad months, and I'm like, man, how am I going to make the payment on this vehicle?
Which goes back to that whole point of business finance has to be more intentional than personal finance. Yeah. It has to be if you want to be successful.
Now, one thing I think on that same note that it is in common with personal finance and business finance that unfortunately most business owners don't do, and that is, in personal finance, we're generally always looking at, all right, I'm putting some money away for a rainy day, right?
Yeah.
Okay. In business, a lot of small business owners aren't putting money away for a rainy day because I'm going to get taxed, because it's called profit, right?
Yeah.
Because on your paycheck, it's pre-taxed, right, before you get it. So you aren't taxed anymore, so you don't feel that obligation, right? Because they took it out before you even see it. But in profit, we say, oh, no, they're going to take taxes out. Well, no, why don't you treat it like that's just part of the game, because I need to have a rainy day fund, which also means that now in the future, when I say to the bank, I'm ready to grow, and they go, well, great, let me see your P&L, and you can go, hey, it looks fantastic because I'm showing growth and profit every year, even though I paid some taxes, right? Just like I do on my paycheck, okay? But that's a mix that most small business owners don't get correct.
Yeah, I think that's a good point. I think it's a really good point. So I want to deviate a little bit from the DIY. I don't think it's like a perfect analogy. It doesn't cover all.
No, it doesn't. But it opened for an interesting conversation, because it really, I mean, at least for me, I found that as a fascinating question, because it just makes me think about it from a different angle that I don't normally. That now made me look at some things that I'm curious to make some adjustments, and probably, if in the future, as I talk with people, probably going to shift a few things because of that. So thank you for me personally.
And that's kind of the goal of that, is to say, hey, don't get hung up in saying, I got this. Look at it from a different angle, have some perspective. So one of the things that I think is absolutely essential to bring up, if you're going to talk about the difference between personal and business, is that personal is a consumer, business should be a producer. And consumers and producers are very different things, and they're different animals. So a consumer means that I take. On the personal finance side of things, what do I do with all of my paycheck? I mean, maybe I'm investing some of it. If I'm smart with my money, I'm taking, 10%, 20% and investing it. Yes. Maybe 10 or 20%, right? It's very rare to see someone who's investing 50%. You've got to be in a special stage of life where you're aggressively gearing up for retirement, or you have a spouse whose sole paycheck is going just to investments, or you have some inheritance. Like it's kind of a unique situation. But most people, and honestly, most people aren't even investing.
Yes.
Or nowhere close to enough. They might be catching their company match and being like, oh, I'm grabbing the 5% that they're giving. I'm just like, it's not enough, Right. But so even if I'm doing 10 or 20%, there's still 80%. And what am I doing with that 80%? I'm playing. I'm covering all my bills, but then I'm going out and I'm buying cars, and I'm buying laptops, and I'm buying cell phones, and I'm buying vacations and clothes, movies, and
eating out.
And so it's this idea of consumption. I'm taking, right? Which is fine. Live your life, enjoy your life. As a business, if I were to take 80% of what comes in the door through sales, and if I were to just buy whatever I felt like buying, I'm going to be in business for about 3 more days. And so most of it is going back into the business to produce. I'm buying inventory. I'm paying for labor of, people who are going to work for me. I'm paying for rent of my space.
Equipment.
Yeah. And so there are so many things that are producing. And so every business decision, when I go to the movies, I just have a good time. I'm like, okay, I'm going to buy a couple tickets to the movies. I'm going to buy some popcorn, going to take me and my wife out. It's going to run us $30. All right, $30 later, cool. I don't care. That $30 is gone. I don't even worry about it anymore. But if I'm a business and I'm going to spend, and I get that $30 is a really low number, but if I'm going to spend, $1,000, I'm looking at that and saying, what's the return? What can that produce for me?
Right.
Because I want that $1,000 to generate $1,100 or $1,200 or whatever it's going to generate for me. So when I buy equipment, that equipment better last me and produce for me for a period of time. That employee better gain money for me. And so that's what I mean by the difference between a producer and a consumer. And there's a lot that can go into that, but I think I'm going to just leave it at that, of realizing that difference.
So let's talk for a minute then now about debt.
Okay.
Because consumer debt and business debt in some ways look similar, even though they're different. And by that I mean they both might look like a dog, but one's a Chihuahua and one's a Lab, right?
Okay.
They're dogs and they look similar, but they're different. And you need to understand that because, and for some people, this might take a minute to kind of sink in and say, okay, I see where you're going with this one. And that is because as consumers, a lot of people have consumer debt, right? Which is, for me, I try to stay out of debt as a consumer. It's just not a good use of your money, but houses and a few other things you do, right? So normally we would counsel someone on the personal side, don't do any more debt than what you have to, right?
Mm-hmm.
Okay. But in business, and especially when you get into corporate finance, debt they look specifically at debt and they want to have a certain debt commit, right? They actually grow their business via debt.
Mm-hmm. Okay.
In personal finance, you try to grow your personal finance through debt, you can't. You'll lose every time.
Yeah. So I'm going to change your Chihuahua Lab scenario. I don't even think it's that close. I think you're looking at a Lab and a Pinto horse.
Okay.
Like this is not the same animal family when you look at consumer debt and personal debt, or consumer debt and personal debt's the same thing. That was said wrong. When you look at personal debt and business debt, they are so different that I'm like, from far away, maybe they look the same, but as soon as you look at the details, get up a little bit closer, they're very different. And you already hit on some of the points here, and that is, as a consumer, every time I take on debt, it costs me more money. As a business, every time I take on smart debt. Now you can blend, you can get all mixed up and treat your business like a consumer, and you can take out, I'm going to get to that. Let me finish this thought, and then I'm going to get to that point. So in business, your debt is actually making you money. In personal, your debt is costing you money. So the money is going opposite directions.
But explain that, because that's important to know. And I'll talk through it and then you clarify it. Okay. The reason why in personal finance, debt costs you money, in business, debt can make you money, is because I'm usually using debt to produce something, to create higher sales. So what I'm producing has a higher return. I'm making more money on, where personally, when I take on debt, taking that money, I can't take my money, debt money, and then invest it in something that's going to get a greater return.
Yeah.
But in business, I can.
Exactly. You have a vehicle to do that. And that's really, I thought you did a great job of explaining that, but that's really the difference, is where do I get to put that money? When I do personal debt and I'm going to slap it on my credit card, I'm buying something with that. There's no investment happening. Yeah. And if you're using money that you're putting on your credit card to turn around and invest,
a credit card really, that's the extreme of interest. So it helps you bring the point home. I can't take a cash advance on a credit card at 21%, invest in a CD at 5%.
Exactly.
Right?
And
I'm upside down.
the funny thing is as a consumer, my debt rates are about as high as they can go unless the government has stepped in with like a home mortgage program.
Right.
But if you're going open market consumer debt, credit card debt, and you're up there in the 20 percentiles, that's because they know that you're just buying stupid stuff with it. But as a business, interestingly enough, it is not uncommon to get 0% interest on business debt. Vendor credit happens all the time. Yeah. And even if you don't have vendor credit, the banks want to do lower. I mean, there's risk involved. And so I'm not trying to paint a negative picture here, but I'm trying to say that banks are actually excited about business debt because there's a vehicle that's going to grow more money out of it. And so they love business debt. They love solid business debt. And this is where I want to tie back to that, where I got a little ahead of myself. Banks want solid business debt.
Yes.
They're constantly on the lookout for people that are using their business as a consumption vehicle. And this blurs the line between personal finance and business finance. If I am looking at all of my business assets, I'm looking at my cash flows, I'm looking at my history, especially if I have just stepped into a business. Let's say that I'm a second generation or a third generation business owner, and I don't understand the decades that it took to build that up. And I start saying, wait a second, you mean I have access to all this cash just because I'm a business? And I've seen a lot of careless debt consumption from business owners because it is available. Banks look at businesses as producers. And if you've got a history of production, but then all of a sudden you change your mentality, they'll still treat you like a producer. And so they'll lend to you as if you are a producer. But if you turn around and take that money as a consumer, then you have now flipped the scales and you're in dangerous territory. Let me give a specific so that people, because that might have been hard to follow, right? So if I'm going to take out a business loan to buy a vehicle. I see this happen a lot where entrepreneurs are like, well, I want to have a vehicle, and they use it for personal use. And it really is only personal use. And they're going out and they're just like, well, all of our other work vehicles are, $70,000, $100,000 vehicles. So therefore, I'm going to go buy a $70,000 vehicle for personal use, when in reality, they really should only be buying a $30,000 vehicle. Right. And I'm like, I don't have any problem with taking advantage of some tax mitigation and different things so that it's not hitting your personal taxes. And I understand those strategies, but I'm saying make the same decision that you would have made. Don't just augment that decision because you can through your business. And so if you would have bought a $30,000 vehicle, but because it's your business, you're now buying a $70,000 vehicle, you're treating your business like a consumer. Now, some businesses, they have the cash flow to support that. A lot don't. A lot try to be bigger than they are.
Right. So the last point I'm probably going to bring up, and then however many more you have.
I could rant on this forever. We'll see what your point is.
So mine is, in going back to the first part of our discussion when we talk about financials, that personal financials are actually pretty simple, right? Money comes into my bank. I have expenses that come out. I reconcile it fairly easy with checks or a credit card, statement. And then I have an ending balance, right? And the next month, it's pretty much another fixed income that comes in and it comes back out, right? Okay.
Yeah.
But with business finance, if you try to run your business finance like that, you just can't grow your business because you're talking about inventory. Okay. When I have money that come in, and for some businesses, there might be some consistencies, but generally I'm going to say that there's more variance in business revenue than there is in personal revenue. Mm-hmm. Okay. So because of those variances, I have to work harder, I have to manage it differently. I still have expenses that come out right, but I have other things like depreciation, these weird ghost numbers like depreciation. But at the end of the month, also I have this thing called inventory where I have to balance out inventory, right? So I got to go back to my finances to figure out how much inventory I have and what is left on my shelf. And so I know what I have left to roll over into the next month to do it, right? So a lot of business owners don't, that when you start talking that, they're just like, but at the same time, that is so important that you're actually managing the business the way that the finances are supposed to be, not just like on the personal finance where, okay, look, no, just revenue comes in, I'm going to make sure expenses were there and whatever I have left over, I'm good, instead of actually understanding the other components of the balance sheet and the profit and loss and how they relate, and using that to help govern decisions for the next month moving forward.
Do I have permission?
Does that make sense?
It makes great sense. Okay. Do I have permission to get really theoretical here for a second?
Of course.
Okay. So I got my degree in finance, and I always wondered, I'm like, why is finance so complicated? Why is it? I mean, I got my undergrad in finance. There are people who get, a PhD in finance, and I'm thinking, what makes it so complicated that you can go all the way as far in finance as you can go in medical school, right? And I pinned it down to the fact that finance is not a calculation of numbers, it's a calculation of time. And that's actually what makes it complicated. So in math, 2 plus 2 is 4. And if I ask you, hey, what's 2 plus 2? You're going to be like 4. If I ask you tomorrow, what's 2 plus 2? It's still going to be 4. If I ask you a week from now, what's 2 plus 2? It's always going to be 4. That's math. Finance, I say, hey, what's 2 plus 2? And today it's 3. And tomorrow it's 5. And next week it's 4.
Yeah.
And it's the same 2 plus 2, but because of when I ask, it actually changes
That's right.
the answer. And so most of us...
You probably shouldn't have brought this one up. But that's right. That's absolutely right.
And so most human beings have a hard...
We might need to do another episode of this concept.
Wow, between DIY and time travel, I just got you going.
Oh my goodness.
But most human beings have a hard time factoring in time. If you look at it, if you want to question this, I'm going to be sleeping on the couch for this one. My wife, I love her, but if we need to be somewhere at 7 and at 6:58, she's like, okay, I'm ready to go. And I'm like, dear, it's going to take us 15 minutes to drive. We're late. No, it's 6:58. We're not late yet. And then she used to speed a lot. Oh, I'm really sleeping on the couch.
Good thing she doesn't.
She used to speed a lot, and I sat her down and I ran the numbers, and I'm just like, you do realize that the difference between going 25 miles an hour or 40 miles an hour in a 25 mile an hour zone in like a mile and a half, it's seconds. It might be a couple minutes. It's not going to magically make you not late when you're 15 minutes behind.
Right.
And human beings have such a hard time of understanding, okay, if I am going to be somewhere, it's interesting. Why does the airport want you there 2 hours early? It's not that it takes 2 hours to get through the airport. It takes about 40 minutes to get through the airport. I travel a lot, and every single airport takes about 40 minutes to get through. But there's that about. Like, it can take an hour and a half. It can take 20 minutes. And so they say 2 hours because they don't want you to miss the flight. And then what does everyone do? They sit around and they wait. They're used to that for an airplane, but they won't use that same mentality when it comes time to just show up to a party. Why is everyone always late to a party but on time to their flight? Because we don't understand time, right? So finance is based on time, and that's what makes it so complicated. Personal finance has been broken down to a month.
Right.
And almost everything will fit nicely within that month. And so a lot of people will get paid monthly, or if they don't get paid monthly, the next most common one is every 2 weeks, which only throws you off twice a year, and it's in your favor. And so if you most people that get paid every 2 weeks, they budget off of those 2 weeks, and then they just take the, those 2 bonus ones as bonus. And so it's easy to manage that, right? The people, and this is interesting, the people that stereotypically have a hard time managing their finances are people who are on very weird wages, like they're on tips. And so they get paid every single day, but some days they made $200 in tips, some days they made $50 in tips, and it's all over the place. And you'll notice that people that are like that, they're either amazing at finance or terrible at finance, because they have to be, because they don't have the consistency of everything being tied into a month. But we pay our mortgages once a month, we pay our rent once a month, we pay our car payments once a month, we pay our insurance once a month, our cell phone once a month. Everything is once a month. Now, there's grocery and entertainment, and have you ever noticed that people have a hard time knowing how to budget for grocery and entertainment? Because those are not monthly. They can't factor in, oh, wait a second, I gotta now figure this out. And so there's this really interesting thing of personal finance is broken down monthly, and it works for most people. Business finance doesn't work monthly. It rarely does. So if I'm going to purchase inventory, can I get that taken care of in a month? No. I got to buy that 6 months in advance or 90 days in advance. And so I'm now having to factor in, okay, wait a second. I'm going to buy this. I'm going to buy it today. I got to put 50% down today. And then when it hits my warehouse, I got to do the other 50%. And so that's going to be in 3 to 4 months. And then when I sell it, and then I'm going to sell it on credit. So I'm not going to collect for another 30 days. And so I got to figure out this piece that just went on for 7 months. And it's very complicated to look at. And I'm looking at payroll. Well, to me, payroll, if I get paid every 2 weeks, well, that makes it so that the bonus is on my end. Yeah. If I'm a business, it's now a negative when I have to adjust for, this month I have to put a full nother payroll in. I'm 50% more on labor this month than I was last month, and that happens twice a year. And so businesses are all different. They're a different beast financially, because it's not that clean. I can put it into a month. And so on the time travel, it's complicated. And that's a big difference.
Well, let's wrap it up with that comment.
You're like, whoa, you already went too deep for me.
No, but I wouldn't be surprised if we do additional episodes because of some of the concepts we've talked about and going into it. But the point I think that was clear that we made today, and that is that personal finance is different than business finance.
Yeah.
And you have to treat them as such. And so if you're running your small business like you do your personal finances, that's probably one of the reasons why you don't seem to get ahead, that you're not having the growth that you're having, because you're not applying the correct principles at the correct times to allow that growth to happen.
And so, which is funny. And I know you're trying to wrap up and I'm opening up a whole nother thing, but we could take this beyond finance and we could say personal relationships are very different than business relationships. Right. You don't treat your employees the same way that you treat your kids. Right. And, so anyway, I'll stop. You got me going, but I'll stop. I'll rein it in.
Well, why don't you close it up for us today? Well, I can do this one.
You got it. You got it. I have faith in you.
So anyways, thank you for joining us on another episode of Learn Biz. You can reach out to us at Ryan or Ethan at learnbiz.co. We're always happy to hear from you. Appreciate your comments that come back and suggestions you have for episodes or concepts that maybe you're not sure that you'd like to have us share on the episode. So please reach out to us with that. Thank you again.
Okay. Take care.